Okay, good afternoon, everyone. Today's topic is on tax considerations for Airbnb. So, this is geared towards people who are thinking of getting involved with Airbnb to make some side money. I'm going to talk about some of the tax considerations. My name is David Wu. I am a chartered professional accountant. My areas of focus is real estate tax, retirement income planning, and risk management. Before I begin, I just want to talk about my Realtor Alliance program. I offer free tax consultations for realtors and their clients as part of my Realtor Alliance program. I also offer free tax seminars for real estate brokerages. So if you're interested in the program, please send me an email at the address that you see on the screen now, and I'll be happy to give you more details and sign you up. Now back to the topic Airbnb. So Airbnb is very popular these days as a way to supplement one's income. And first thing that I want to talk about is Airbnb consider rental income or business income? Okay, so that's an important question because it does have some tax implications. So rental income would be something where you're renting out a room or part of your house for a periodically during the year, and you're not really providing any additional services other than the space and the utilities. If you're operating Airbnb more as a business, this is where you are still renting out part of your home, but you are also providing additional services such as laundry services, cooking services, whatever, those just to name a couple examples. So if you're more operating as a business, um, there is the need to charge HST on sales more than $30,000. So during the year, past 12 months, cumulatively, do you have you sold more than $30,000 worth of sales? If so, then you'll need to register for an HST account with the Canada Revenue Agency and start collecting HST on the amount that on the invoice in excess of $30,000. As a business owner or business income, you'll also need to pay into CPP, Canada Pension Plan, which currently is at a rate for self-employed 10.2%. That will be you'll be contributing to the plan, which eventually you'll be eligible for getting a retirement pension out of it, as as well as a disability pension if you become disabled. So it's just a little bit extra that you're paying into, but you will be able to get some benefits out of it as well. Now, if you are more of a rental income, you still may need to charge HST. So short-term rentals, less than 30 days, are subject to HST. Um, However, long-term rentals, so if you're renting your home for a year, for example, you renting your condo, those are not subject to HST, but short-term rentals are. So again, if you make more than $30,000 in terms of sales, gross rents in this case, then you need to charge HST. However, you do not need to pay CPP. So if you are generating rental income, you'll be reporting it under rental income on your tax return. If you're generating business income, you'll have to start collecting CPP or remitting CPP at the time of when you do your tax return, and you will be reporting business income as opposed to rental income. Now, one thing to be aware of when you are renting out your space, there's a lot of common or shared expenses, such as mortgage interest, property taxes, utilities, internet. Um, those type of expenses you cannot claim at 100%. You'll need to prorate them based on the number of days that you're renting out through Airbnb. as well as the space of the home. So you're renting out a room in your house. You'll have to estimate the square feet of the room compared to as a percentage your overall size of your home and your proration debt, as well as the number of days that you're renting out. So expenses that you can claim uh, will be prorated, but it will be include utilities. If you're in a condo, then the condo maintenance fees, property taxes, mortgage interest, not principal. So very important to know that it's interest only that you can claim. Okay, so this slide just goes through a little bit more details of what I just mentioned in terms of the expenses you can claim. I want to highlight that if you're spending capital expenditures that provide lasting benefit and extend the life of your property, such as replacing the roof and new kitchen, new floors, you do have the option of claiming CCA, which will impact your principal resident exemption. So I would advise against doing that. So capital expenditures you cannot expense in the current year. You'll have to expense that over a period of time by claiming CCA. But again, may not make sense to claim CCA because it will have an impact on eligibility for claiming the principal resident exemption on your home. Just make sure you're aware of that. But the current expenses, mortgage interest, insurance, property tax, utilities, advertising, those are fine. Those are you can do in the current year. Okay, so that's it. Just a short little introduction on tax implications and considerations for Airbnb. Um, Again, I have a Realtor Alliance program, so if you're a realtor, please reach out to me. I provide free tax consultation to realtors and your clients, as well as tax seminars for your brokers. So my email is indicated on the screen right now. Feel free to send me a message, and I'll be glad to add you to my Alliance, Realtor Alliance program. Okay, I look forward to seeing you in my next video. So I hope everyone have a wonderful rest of the day, and see you next time.